day, my viewers. These are the highlights of 19 major changes in the Nigerian tax law in accordance with the Finance Act 2021. 1. Gains made on disposal of shares in a Nigerian company shall be chargeable to capital gain tax at the rate of 10%, with only 3 exemptions. The first exemption is where shares worth below the sum of 100 million naira in any Nigerian company are disposed within 12 consecutive months and the returns properly filed as required by the law. The second exemption is where investments in Nigerian companies roll over within 12 months of disposal. And the last exemption is where lender transfers to borrowers in accordance with the SEC Rule 2013 as amended. The second change, reduction in minimum tax rate. The reduction of the minimum tax rate from 0.5% to 0.25% of turnover will apply to any 2 consecutive accounting periods between 1st of January 2019 and 31st of December 2021 as may be elected or chosen by the taxpayer. This is a fair way to close the lacuna created by the inadvertent drafting error as contained in Finance Act 2020. However, the exemption will only be granted where the relevant returns were filed before the due date. Third significant change. There is now a withdrawal of tax exemption on export profits of upstream, midstream, and downstream petroleum companies. Prior to the Finance Act 2021, Company Income Tax Act generally exempted profits generated by Nigerian companies on goods exported from Nigeria if the export proceeds are reinvested to purchase raw materials, equipment, and spare parts, so as to align with the provisions of PIA 2021, which brought taxation of companies operating in upstream, midstream, and downstream petroleum from petroleum profit tax under CETA is now required that such companies' profits made from export be excluded from the general exemption. 4. Withdrawal of gas utilization incentives. Gas utilization incentives will no longer be available to companies that are formed out of another company that has already enjoyed the incentives. This amendment will prevent instances of abuse of the tax incentive schemes. So you may want to ask, what is the tax incentive that we are really talking about? Companies that operate in downstream sector and deal in gas are ordinarily entitled to claim 5 years tax-free period, the initial tax-free period of 3 years, and possible additional 2 years subject to satisfactory performance. So for companies that have already enjoyed these incentives, when they come to form together, when they do merger with another company, they cannot, the new company format of the old companies can no more enjoy these kind of incentives available to companies within the downstream sector. Number 5, FRS power to assess the foreign digital companies to company income tax on the basis of turnover. Number 6, companies that provide educational services shall be liable to income tax. Number 7, so there are a number of changes on taxation of insurance companies. One of them is the clear definitions and basis upon which taxable profits for life and general insurance businesses are now computed. Then there also additional requirement to they need to add to their returns, going forward. Number 8, penalty for a company who wrongly filed for minimum tax to save costs rather than the true position. So companies that will decide to reduce their tax payment by filing for minimum tax, now they will be liable to penalties. Number 9, premium on contracts for deferred annuity now disallowed. So premium paid on life insurance is allowed as deduction in determining personal income tax, but with the exception of premiums relating to the contracts for a deferred annuity on the taxpayer's life or the life of his or her spouse. This is called tax avoidance, or what you otherwise call tax planning, that is ordinarily aimed at lowering tax payable through investment schemes. Number 10, rate of education tax has been increased from 2% to 2.5% of the accessible profit of a company registered in Nigeria. other than a small company whose turnover is less than 25 million naira. 11. The payment due on education tax, which is not the subject of dispute, shall become liable within 30 days of notice of assessment. And this amendment aligns education tax with similar amendment made under Company Income Tax Act by Finance Act 2020. 12. Excise duty on non-alcoholic, carbonated and sweetened beverages shall be charged at a specific rate of 10 naira per litre, targeted at reducing health risk of the citizens by discouraging its consumption, but at the same time collect more taxes. The earlier provision subject consumption of cigarettes, alcohol, spirit and wines to different rates of taxes per stick and per litre. 13. Collection of stamp duties and EMT, that we normally call electronic money transfer, of 10 naira on deposit of 10,000 are to henceforth be shared among the 3 tiers of government within 30 days of collection. So more money for the government. 14. Companies engaged in upstream petroleum operations has the obligation to withhold VAT even when they have not commenced commercial operations or have not reached the threshold of 25 million naira turnover. 15. Finance Act 2021 shifted the obligation to withhold and remit VAT from a taxable person resident in Nigeria to taxable non-resident supplier. This is meant to curb the difficulties involved in tracking and collecting VAT revenue in a person-to-business transactions as against business-to-business transactions. 16. NASENI, which otherwise means National Agency for Science and Engineering Infrastructure Act. There shall be a levy of 0.25% on profit before tax of commercial companies with turnover of 100 million naira and above, covering the banking, mobile, telecommunication, ICT, aviation, maritime, and oil and gas sectors. This implies multiple taxation for companies in ICT and mobile communications who are currently saddled with another tax we call NITDA, which is National Information and Technology Development Act. 17. Nigerian Police Trust Fund Act, NPTF. All companies to pay 0.005% of their net profit as police levy. Henceforth, FRS is empowered to collect the levy and account for this at the same time. 18. Use of third-party technology by FRS to gather tax information from taxpayers. 19, which is the last change, significant change in Finance Act 2021. Government shall only borrow for capital expenditure, human development, and to undertake critical reforms of significant national impact, provided that such borrowing shall be on the concessional terms or at relatively low interest rates. So these are the 19 significant changes in Finance Act 2021. My name is Olaboy Babide once again. I'm the managing partner of PPS, a foremost tax consultancy firm located in Ikeja, Lagos, Nigeria. So should you have a question or a need for clarification, so you can see the contacts on the screen, the contacts, email, phone numbers, reach out to us. I'll be glad to attend to you. So until we see you again, bye for now.